We have some absolutely huge news for a Canadian small cap stock, one I recently took a position in, and one that has just inked a brand new deal with Amazon that should secure a lot of its revenues through 2029. In this week's video, I'm going to go over the bull and bear case for CargoJet. This is a company that I published a video on back in April when the stock was in the high $70 range, low $80 range. It's now sitting at $110. This is a position that I started back in the low $70 range and have realized some pretty quick short-term returns here. Now, a lot of people are asking me because I have highlighted the company on the channel before, and it's also a Stocktrades premium highlight as to whether or not it is still a buy. So I'm going to go over the bull versus bear case, tackle this company in 5 minutes or less to give you an idea. And as always, everybody, brand new report in the description below. It is my top holdings in my portfolio. You'll get my research, my allocations, what I think about these companies, the main risks with them, the main benefits. So head down to the description, grab that absolutely free. Just takes a few seconds, but let's get right into CargoJet. So what exactly is CargoJet? They are a small cap Canadian company. They are a domestic freight company primarily through air. And what this company does is operates through an ACMI business model. So what that is aircraft, crew, maintenance, and insurance. And what this company does is it locks in long-term contracts with major freight distributors like Purolator, DHL, Amazon, Canada Post, FedEx, UPS, things like that, and it leases them the aircraft, the crew, the maintenance, and provides the insurance. But the one thing it does not do, it does not provide fuel, so it is not exposed to fuel costs. So the bull case, as I mentioned, is the economic moat. CargoJet has a dominant share on the domestic freight, especially through air in Canada, and this seems weird to say because it's a small cap stock. However, Canadian regulations make it very, very difficult for these companies to operate in Canada. It needs to be a majority Canadian-owned airline. So companies like Amazon, UPS, things like that, they don't want to make the investments into Canada, and they also don't have that majority Canadian ownership. So instead, they pay CargoJet to provide the domestic shipping. The moat is large, and there is very few players in the space. Air Canada has tried it. They haven't really done that well at all. So CargoJet definitely has a dominant share there. The second bull case, and is one of the main reasons I bought, is the domestic shipping activity. We have a lot of geopolitical tensions. We have a lot of tariffs. So there is a large amount of goods from China that are bound for Canada that go to the United States first. But with this entire new tariff situation, there is a very high likelihood that the Chinese shipments will come directly to Canada to avoid those tariffs. CargoJet is preparing for this. They're adding a lot of new fleet this year for direct shipping from China. So this is one element. The second element is provincial trade barriers being knocked down. Before these tariffs came into play, there was a lot of nonsensical trade barriers between provinces that really limited domestic shipping. These provinces right now, in kind of the whole Buy Canada situation, are looking to knock those down, which ultimately should allow for more cross-provincial shipping, which, if you're going to do this, you will go to the largest shipper in the country via air, and that is CargoJet. So this is another bullish case for the company. The third bullish case is valuation, and it seems crazy to say this because the company is up 40% over the last couple of months, but CargoJet trades at a 5.8x EV/EBITDA ratio. Now, this company typically over the last 5 or 10 years has traded anywhere from 9 to 10x this valuation. The company is still cheap today. And a quick note on the final bull case, and I mentioned at the start of the video, but they did ink a new deal with Amazon, which is one of their main partners and should provide relatively consistent revenue through to 2029. There was a lot of uncertainty on this deal, but it ended up getting done, which is why the stock has done so well over the last few days. So bear case would be customer concentration. There are not a lot of major distributors in the United States in terms of freight. So as a result, it does have a lot of its revenue concentrated in 5 or 6 clients. Now, this is unlikely to be lost because of those regulations that limit these companies from operating in Canada, but there is still the potential for something to happen for Air Canada to get some of those contracts, things like that. It's a smaller risk, but it's a risk nonetheless. Second bear case is obviously the cyclicality of the economy. CargoJet is going to be cyclical. It is not a company that I would buy and hold long term. It's one that you need to take advantage of the ebbs and flows in the economy, because ultimately when freight slows down, CargoJet's valuation will go down, which should provide a strong opportunity to add. But when freight activity is at its peak, you kind of have to look to exit this company because of the inevitable slowdown that will come, impacting their share price. Now, the other thing is debt and overall leverage. This is a very capital intensive industry. CargoJet has to lay out a lot of capital expenditures to maintain its aircraft, to buy new aircraft. It is heavy on the debt side, so a slowdown in freight activity ultimately can hit the company's income as well. So the final bear case would be added competition. Now, these major US players can't necessarily easily enter the market, but somebody like WestJet, somebody like Air Canada, they could take on that freight element of the business, which ultimately, if there is more players in the space, it could drive down the price of overall freight through air, which could impact CargoJet. So my overall thoughts, obviously I own this company. I've been buying it over the last 2-3 months here. I've realized some very strong short-term returns. I'm a buyer here. I'm still a buyer at $110, even though I was a buyer at $74, and I do plan to continue adding over this time period. I love the moat. I love the business model, and I love the valuation. As I mentioned, it's not one I would own long term. It's too cyclical for me, but it's definitely one I'm going to be looking to take advantage of over the next 2 or 3 years here, and then look to exit my position. That's it for the video, everybody. As always, head down below, like the video, subscribe to the channel, comment, let me know what you want to see next, and grab my top holdings, my top 4 holdings, all my research, my overall thesis, my overall risks of each company. You can grab that in the description. It's absolutely free. It takes you a few seconds, and it's going to help make you a better investor. And as always, everybody, stay tuned for more great investing content.